Hey, I'm Brad with Wooten CPA, and my goal is to bring peace to your finance and tax responsibilities. One of the ways I do that is through these videos on YouTube right here. So don't forget to subscribe to my channel, hit the bell down there beneath the video so that you get notified each time one of these new videos posts so that you can find out those tax tips, financial budgeting tips that you're looking forward to. So today we are talking about some reminders on some year-end items that you want to be aware of, as well as some things that have changed over the last couple of years due to the Tax Cuts and Jobs Act. Now, I do have a 2019 year-end tax planning video that was originally part of this video, but it got a little bit long, so I cut this piece of it out. Now, that other video will have your tax planning tips as far as things that you can do between now and the end of 2019 in order to minimize your tax liability, maybe reduce your tax liability when it's time to file your taxes at the beginning of 2020. So don't forget to hop over. I put a link to that video in the comments below, or actually in the video description below. I've also got a link to that that'll pop up here in the top of this video now. You can click on that and jump over. Again, that's the 2019 year-end tax planning tips to help minimize your tax liability. Things that you can do now before the end of the year that will help you when it's tax time, February, March, April of next year. So this video, again, we're going to jump into, it's mostly some reminders and covering a few items that have changed over the last couple of years thanks to the Tax Cuts and Jobs Act. So we'll jump into those now. So the first item that we're going to talk about are home office deduction. So I am in my home office right now. I'm self-employed. I have no other office. This is my main office for my admin work and meeting clients remotely through video chat and phone conversations. And so you might have a home office. Now, if you are an employee of an organization, you can no longer do a home office deduction thanks to the Tax Cuts and Jobs Act. For those of you who are self-employed, can still qualify for this. It is subject to some rules and limitations, so you want to make sure that you're aware of those. Now, number two item to be aware of is moving expenses. Again, this is thanks to the Tax Cuts and Jobs Act. So if your employer has helped cover moving expenses for you, maybe they give you a moving reimbursement or a moving allotment where, hey, here's $10,000, we're moving you from Florida to Minnesota, and we're going to help you cover those expenses. That is now taxable income. It used to be tax-free income to the extent you used it to move, whether it was paying a moving company or renting a U-Haul, the mileage to get there. All of that was able to be tax-free income. Now it no longer is unless you are a member of the U.S. Armed Forces. So if the military is moving you, you're in the Marine Corps, or you're in the Army, you can still get this as tax-free income when they help you move. However, if you work for a civilian organization, you can no longer take that as tax-free income. Along with that, if you pay out of pocket, your employer doesn't help you, but you pay out of pocket, and you have what would have been a qualified move for the moving deduction, there's no longer a deduction for moving expenses. So that is all coming out of taxable income now. So unfortunately, we lost that benefit in the Tax Cuts and Jobs Act. The next one is casualty losses. Again, this is another item where we lost a little bit of ability to deduct casualty losses. So if you had a fire in your home and lost a lot of items or your home, you can no longer deduct casualty losses unless they are tied to a federally declared disaster area. So for those of you who are in federally declared disaster areas, some of those this year, there were quite a few that received this relief due to some severe storms, some flooding, and some tornadoes. So South Dakota, Texas, Missouri, Ohio, Arkansas, Oklahoma, Iowa, Nebraska. If you had a casualty loss due to a major storm, tornado, flooding event, it's quite possible you can get a casualty loss deduction for the items you lost in that. So you'll want to look into that. The other one is Alaska. Actually had an earthquake that the IRS it was a federally declared disaster area, and so that would qualify for casualty losses as well. So for casualty losses, remember, no benefit there unless you were actually part of a federally declared disaster area. Now, Roth IRA conversion. So this is where you take a traditional IRA, 401k, you convert what you contributed to it to a Roth IRA. Now, you will pay tax when you convert that money from an IRA to a Roth IRA. The point of a Roth IRA is you put in contributions that are taxed now, but when you take them out, the earnings and the principal, none of it is taxed when you take it out of retirement. So the only reason you would want to do this is, again, if you find yourself in a year where you have experienced lower income than normal and lower income than what you expect in retirement, you might want to do a conversion, pay income tax on that money now while you're in a lower tax bracket, so that when you take it out in the future, when you expect to be in a higher tax bracket, you will not pay tax on it at that higher tax rate. So this, again, only makes sense if you find yourself in a lower tax bracket this year than what you expect to be when you take the money out of the IRA. Now, the last tip here that I have is to check your withholding. Now, the IRS has a calculator on their website. I will put the link in the comments below or in the description of this video. Now, you want to check your withholding. Again, it's December 10th. It might be a little bit late to make any adjustments, but if you project out what your withholding is going to be, you check it, and you find out you're going to owe a little bit of additional income tax instead of getting a refund when you do your tax return at the beginning of 2020, at least you know that now. You can start setting aside some money to be able to pay that tax, and you are prepared for it. The other thing that you're going to want to do is, if that is the case, you're going to want to adjust your W-4 to have your withholding increased for 2020 so that you don't run into that situation again. Now, again, there is an IRS tool that works on their website to be able to do this, or you can contact Wooten CPA, and I can project your taxes for you as well and let you know if your withholding is sufficient, if you need to increase, maybe if you need to decrease, maybe you're getting too large of a refund. Now, maybe you like getting that refund. Refunds are great, they feel good, but basically they are money you have lent to the government interest-free for the period of the year. So having too high of a refund really isn't a good thing financially, because it's just money you've loaned at a 0% interest rate that you could have had in your pocket throughout the year if you lowered your withholding. So you want to double check this. You're going to want to update that W-4. I will have a video coming out. There is a new W-4 for 2020, and I plan to get a video out on, just the tips of how to fill that out, how to go through it, and what to do. So these are your reminders for the year-end 2019 of things to be aware of, things that have changed a little bit. So don't forget to subscribe to my YouTube page and hit the bell so that you get notifications of any new videos. I do plan on ramping up the videos as we get into tax season. Again, these are going to be subjects where I just want to bring peace to you and your finance and tax responsibilities, help explain some of these topics, make them easier to understand for you, and give tips and ideas here that will help you out. So again, subscribe to the page, hit the notifications, share with your friends so they can experience that same peace and understanding that you're starting to gain through watching these videos. Thanks for watching.